Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, on this smashing Saturday for what is going to be nothing short of another jam-packed daily cryptocurrency market update. It has been a pretty roller coaster-esque week, but we're going to be breaking everything down in this video. To start things off, we're going to be talking about a recession in the United States, which, of course, would not see the stock market and risk do well, which would essentially go against everything that we've looked at thus far. Now, we are in the camp that a bull market is very much here for the cryptocurrency space, and right now is the best time to be speculating on the cryptocurrency market. That is my honest opinion. I think there is some monumental price movement to come. I think the stage is very much set, and we need to allow things to happen. And if you look at our calls on the stock market, on gold, largely on crypto as well. You know, if you look at a lot of altcoins, some of them have done spectacular this year. Others largely just gone sideways. But we are in this sort of period that I think is going to be very good for risk. And of course, we've divided Bitcoin and the total two, which is the altcoin market, against many kind of risk assets out there, like the SPY Gold, which is set to outperform Amazon and the likes. And we've got that higher target for Amazon. So the annoying thing with crypto right now is we have seen the Dixie roll. The cryptocurrency market, though, however, has kind of been the anomaly. It's been the kind of outlier in regards to the risk basket generally. As they've continued to climb, crypto's kind of come down, and that means there's something internally going on. It could be the German government, it could be the Mt. Gox news, it could be a number of things at a time when there's very low liquidity or interest in the cryptocurrency space. But we've continued to state that you're either in the camp with me, or you're in the kind of camp that this bull market isn't happening. It's entirely up to you guys. You've got to make your own decisions. What I want to start the video off on, though, however, is talking about a recession and talking about what it is you guys should be watching in regards to a recession. And this is coming on the back end of non-farm payrolls yesterday, and probably more importantly for me, the unemployment claims. We're also going to be looking at a clip from CNBC where they speak about the non-farm payroll and where the jobs are actually coming from, potentially hinting at not such a good picture that they've been painting. Also, we've had jobs literally get revived, the non-farm payroll get revised down on every single number. The Fed has really used non-farm payroll and the labour market to keep rates where they are. And there's going to be, I think the Fed is going to cut rates far more aggressively than what people are pricing in. And I think that's going to be what gets things rocking and rolling and continues the upside in the bull market that the stock market is in. And crypto is really going to come into its own and start to outperform everything once again, like we've seen sort of since the start of 2023. And you can get that from dividing Bitcoin and the total two from a number of markets out there. So a lot to talk about. We're going to be looking at unemployment with the stock market and the correlation there. We're going to be looking at the US PMI cycles. We're going to be looking at inflation. We're going to be looking at the 3/4 jobs added last month came from government, essentially. We're also going to be talking about a comment from Dan Tapario, talking about basically what we're talking about, and then we'll look at Bitcoin, crypto more broadly, and kind of reaffirm our bullish narrative on everything. The stage is very much set. We just need to give it time to play out. So, of course, yesterday, and we are down here, we had unemployment rate, 2 unemployment rate datas that came out worse than expected. And, of course, we had non-farm payroll, which has really given Jerome Powell the backing to continue to, first of all, up interest rates, but not only up interest rates, keep them where they are, you know, whilst we've got this hot labour market. However, with unemployment creeping up, this is definitely putting the pressure on him to bring things down. And again, we spoke about you're in two camps. So we've looked at a lot of things technically that suggest we're in a bull market. We've looked at things fundamentally. We spoke about what's going to drive everything, global liquidity cycles, PMI cycles, which we're going to come on to in just a second, and everything in between. But if you're in the other camp, the most important thing really you can watch is unemployment. And the correlation between unemployment, and we've got the SPY on here and a nice SPY red. This is unemployment. Unemployment at no, low, stock market at a high. Unemployment at a high, stock market at a low. Unemployment at a low, stock market at a high. Vice versa. This is the correlation. It's like a seesaw. And with unemployment upticking, it's not great for the markets generally and begs the question of a recession. Now, we're bullish on the bond market, and there's two paths the bond market's going to take. We're in the latter. So the first one is people go into bonds because it's a recession and they're a safe hedge and they start to bring rates down, thus the yields and bonds start to get a bid and really perform. We're in the camp that actually the reason bonds are going to do well is because the Fed's going to step back in without a recession to continue the Ponzi scheme that is the fiat systems, because they can't allow bonds to fall too much lower. And we are predicting, and we've been predicting this for a while since we got back into the market in 2023, is we're not going to have a recession or a bad one. They're going to continue to stimulate. They're going to continue to propagate the Ponzi scheme, and they're going to go back to supporting the markets without a demand destructive event, which comes, I think, later on down the line. I don't think we're there yet. And I think you're going to have a bull market into that. And when we look at, what we look at on a daily basis, technically, so we've got Bitcoin going to 151K. I think get to 100K this year. We've got the best months ahead of us for the year. We've looked at things like gold that we're obviously very bullish on, very much making its way towards our target and sorting itself out. We know what we think is happening with the dollar, which is going to be driven by interest rates. It's very much dropped out of the falling wedge that we were looking at, or rising wedge that we were looking at. Risk generally has done well on the back end of this, except for crypto, which means that there's something internally going on. So to come back to the sort of macro, we've got loads of targets for smaller stocks as well. Lots of them doing very well. We've still got our target for Amazon, very much progressing and making its way to where we want it to get to. And of course, you can divide Bitcoin by Amazon and so on and so forth. But really, we want unemployment to not be an issue and continue to rise, because we know we just looked at the correlation here. If unemployment is going to rise, that means that your PMI cycles aren't going to play out as they historically always have. And Bitcoin very much follows the PMI cycles. A lot of this stuff is going over a lot of people's heads. Don't worry. That's what we're here for. Because what this channel really does is make it our business to understand things that the vast majority of cryptocurrency channels don't understand. And that is how cryptocurrency finds itself in the broader macro environment. If you're in that camp that risk is going to do well, we're not going to enter a recession, depression, whatever it is, and liquidity cycles point to that, the PMI cycles point to that, the Bitcoin 4-year cycle theory points to that. Raoul, even though I'm not as big a fan, called it the banana zone. I very much think that's coming. I think the Fed's going to step back in before something breaks, and they're probably going to do that on the back end of obviously what we're seeing in regards to the creep up in unemployment, which is probably more important than non-farm payroll, which is a load of BS anyway. And this is generally going to see risk do well, because yields will be coming down, which will lead rates, which will see the Dixie come down, and we know that risk's generally going to do well in that context. And we've seen risk play ball with that, other than Bitcoin and sort of crypto. Let's play a very, very short clip in regards to CNBC talking about the labour force participation rate, because we know that the Fed and the stats are not necessarily a lie, but certainly manipulated. And let's dive into that, and then we'll continue on with the video.
In education. So the rest of the jobs not doing. 74% of the jobs came from government and healthcare and education. So that's where the bulk of the jobs are. The rest of the jobs not doing quite so well. Leisure and hospitality, which had been a big source of job growth, just 7,000. Retail, we'd had some strength there, down 8,500. And then temporary help, which is a potential leading sign, minus 48,000. So you have this kind of dual sector economy. By the way, it's not the federal government. A lot of it is local government jobs. They seem to be still hiring in those places or those municipalities. And it's the hospitals up 22,000. So that's where a lot of the job growth is coming from. 74% of the jobs came from.
We'll leave that there. So a lot of the jobs are government-added jobs. The job numbers have largely been revised each and every time. The pressure is now on for Jerome Powell to cut interest rates. Inflation's been the reason why interest rates have been where they've been at. We know inflation, if you go by true inflation, and even the Fed's own stats, isn't such a problem anymore. I'm in the deflationary camp in regards to inflation. The question is that deflation happening because of a recession, or is it happening because, we've avoided a recession essentially? They're lowering rates. I think you'll see inflation potentially deflate for a little bit, but start to sort of pop back up. I'm not in the sort of 1970s style inflationary cap. I honestly believe we're in this sweet spot for markets. And actually this time is very different. And people always talk about a pivot being bearish for the markets. One thing I want to say to you guys is go and look at the charts and look at how the S&P reacts every time they drop interest rates. 2 of the past 5 times has caused the markets to crash. The other 3 times out of the past 5 times, so more times than not, in the past 5 times they've lowered interest rates, the markets have actually done well. So the pivot narrative, pivots are typically bad for a recession. Well, what's the context? And this is what we're trying to understand. Are rates coming down because we're in a recession and we need to? Or are they going to avoid that? We're going to be in this sweet spot. They're going to go back to supporting the markets. Bonds are going to do well. And equities are going to do well. And the dollar's going to come down, as it always does, against when you start to see yields and interest rates come down. Why when they bring interest rates down, does the Dixie go down, which is going to see risk do well? Well, it's because the dollar is a larger market. So when they up interest rates, even though countries are upping it at the same degree, there's more demand for dollars because it's a bigger market, and vice versa when they bring it down. So I do think the Dixie is going to fall. We're very much confident in the view that we have on the markets, and we think technically that's all signal. We don't think inflation is an issue. This is from Dan Taparini. He said, macro people, whoever they are, softer economic data today ensures a more aggressive Fed to the downside, by the way, is what he's talking about here. Just wait for unemployment rate at 4.5%. Expect liquidity driving gold and silver, and NDX, US dollar weakness too. Strap in now or forever hold your peace. We agree with this. This kind of summarizes what we're looking at. And when we look at the charts, we've gone through Bitcoin. We've done so much on this channel, guys. If you're not a subscriber, do become one. There's a link to the newsletter in the description. We are about to drop our courses, I think, next week. If you can, and we'll heavily discount it if you join the newsletter or become a Patreon. And you will get a discount through being a Patreon. And also you get access to weekly meetings and everything. It's such a good, because basically the course is derived from Wyckoff's market cycles, Dow's market cycle theory, Stan Weinstein's 4 stages of a market, so stage analysis. And we've kind of evolved that like most TA before it and added technical patterns, indicators and everything to it. Indicators that we actually think works. The vast majority of them don't. But when we look at things generally, we don't see a recession because technically the markets look good. And we've been super, super right. Lots of our targets been made, even things like the German indexes. You know, if we look at the DJI, even something like the Dow, look at that for a target made. And we're just waiting for crypto to really come into its own. Gold doing very well. Dollar coming off as we were expecting it to and coming to the lower band of the channel that we've been in since 2008, which also signaled with rates. We look at lots of things like crypto indexes. So this is digital large cap fund. The grayscale one's interesting because this is GBTC, which made our target. It's made 2 targets for us that we're very right on. This is GETH. Target made. And this is now grayscale digital large cap fund, so the altcoin market. And you can see the lineage of flow into money. Obviously, we've got the same thing on Bitwise. We've got the same thing here. Total 2. We're still looking for this. It's not a good sign that you have actually ran your left shoulder, but we need to see that strength come in. We'll see if we see it and the pattern kind of completes. Then we're looking at 3.8 for now. You know, we need to see that strength come in. And if you look at where kind of altcoins are at, yes, it's volatile. Yes, it's crappy. But now I believe is the optimal time because we've got a good time ahead of us. And that's all going to be supported by the macro environment, which aligns with global liquidity, so on and so forth. We're not in the recessionary camp. We're in the markets are going to do well camp, and we need to give it time to play out. You know, you've got seasonality in the markets right now. Solana doing spectacularly, by the way, guys. Really just breaking out and kind of supporting. Another reason I'm bullish is because of Solana against Bitcoin. Look at this for a chart. This isn't going to be happening in a bear market. It looks very similar to Injective. Binance Injective? Yeah. And it's kind of here. And you've got this to come. Injective very nearly to our target. So I'm really going to love and leave you on that note, guys. We've rambled on about quite a lot. You're in 2 camps right now. You're in the recession is coming camp, and you know what to watch for that unemployment. We've looked at the correlation between unemployment and the markets. It's kind of an anomaly. If we do see that unemployment rise significantly, it is going to throw a spanner in the works. But and a recession's coming, and that's why the Fed pivot, because things go horribly wrong. That's your bearish camp, bull market not happening. We're in the bullish camp that actually they're going to find the sweet spot, and we've been very right on that thus far. There hasn't really been a landing thus far. And I think it's going to be a softer one because they're going to continue to proliferate, not just because that's how politics work and they kick the can down the road, and why would they not? Why would they choose a complete destruction unless it's planned and they want the reset? And I also think there's a greater plan at work here in regards to leveling everybody off. They want to continue to proliferate the money supply so that it brings everybody down to this serfdom class. And that's their idea of equality. Isn't everybody equally rich and doing well? It's everybody equally poor and controllable and dependent on the government as a result of it. That's it from me, ladies and gents. Second channel is coming on some of our thoughts. I'm going to love and leave you. You know what to watch. Economic data is probably what's going to drive the Fed's lower interest rates quicker than most people. I think that it's a game of chicken right now. They don't want to do it just yet because they know what's going to happen with the Dixie, what that's going to do for risk, what that's going to do for liquidity. And, of course, they don't want to sort of re-stir inflation. That's it from me, guys. I'll see you all on Sunday. Thanks all for watching. See you in the next.